Good day, everyone. Well, the market has come straight up from its lows. Volatility is still elevated, so we can expect more noise in the markets. But that said, the markets could move up through their 50 days, just as they've done before. As you can see in this QE-ridden environment, the money just has to go somewhere, so it just pushes bonds and stocks higher. There could be some backing and filling first as the market anticipates the upcoming Fed meeting. Of course, everyone hopes, or the market hopes, that the Fed will extend the QE3 program or perhaps announce a future QE4. And they know that if they don't extend it, the market's probably going to sell off. So MDM, market direction model, has to remain quite nimble in this environment. As easy as it sounds, if the Fed does not make an announcement of future QE, or they'll probably say we will have a future QE but not give any specifics, that could cause a sell-off. But given that the Fed speak is kind of a horny nest of a misinterpretation and maneuvering of meanings, that could, of course, cause a tug-of-war between bulls and bears in the market. But overall, MDM is holistic, so it needs to see more of the bigger picture on where the market might be headed as a result of whatever the Fed says, but most importantly, how the market reacts to the news. The price-volume action of the major indices and leading stocks is always the cornerstone, not anything that the Fed does or says. Now, as we know, economies have not been healing as they were expecting them to, and commodities continue to trend lower. So confidence in QE has to be on the wane. But as I said before, when the Fed pumps money into the system, it's got to go somewhere. And that's why the saying, don't fight the Fed, rings so true, because as you can see, in QE1 and QE2 and now QE3 that started at the beginning of 2013, the markets are in fairly relentless uptrends. But again, it's not so simple as saying, okay, I'll just buy and hold and while the QE program's underway, because the uptrends are pretty sneaky. They're not traditional uptrends that we're used to from proper non-manipulated markets. And also the other factor is the fund managers struggle to keep up with the averages, so that keeps a shallow floor under corrections as they see that as an opportunity to get in less and maybe get a jump on the market performance. But yeah, we'll see what happens at the Fed meeting. That'll be pretty pivotal, and I think markets are probably telegraphing right now that the Fed is planning on some form of QE in the future, and so this sharp bounce that we've seen, it should slow. It's not going to continue its rate of ascent, but it could be a situation like we've seen many times before. You get a straight up off bottom action after correction, and then the market slows, but it still has a very small baby stepping ascent higher, as it did, say, in February, where it eventually hit new highs there, or in July of 2013, where it went straight up off the bottom and then continued on higher. So we'll have to see how this plays out. But right now, we are in a elevated volatility situation. So keep your position sizes manageable and reflective of that. Gil?
Yeah, I guess that would be known as an EVS, an elevated volatility situation.
Gil, can't hear you.
Oh, can you hear me there? I think there was a little...
No. Your mic sounds off.
How about that?
There you go.
Okay, I guess that's what we call an EVS, elevated volatility situation. First of all, I want to say I had a great time over the weekend at the HGS Investor Software Conference and met some people there that were impressive traders. Actually, that group I like a lot because, number one, they're a very sophisticated group, a lot of seasoned traders there, and they don't ask dumb questions. So it's always a good presentation. Dinner was fun. Anyways, well, I think, let's go rewind to last week when we were doing the webinar last week. As I pointed out, as we were pointing out, you were all the way down into this congestion area from April, May, mostly May, out down into these lows, and you're getting oversold. And as I told you at the time, I was buying some stocks like There's my hot baby right there. But, G Pro off the lows here because they come down to the top of this base. Baba down here on the pullback to 84 here. And of course, I sold into this move, and then of course it goes higher. But that's okay because earnings come out next week, and I want to see where this thing goes from here. But when you see the market doing this, I'm generally looking for things like we talked about last week that are kind of like ugly ducklings and in a position to potentially rally. I think a couple others. Mobileye, they come out with earnings on Tuesday, I think. But see how it undercuts the lows here, and we were talking about this last week. So you basically can take this low here, it's 45.65, add $3 to it, you get 48.65 here, and that becomes a shakeout plus 3 buy situation. There's no volume though, so that's problematic. But what I'm watching from here is stock holding along the 20-day line. If it pulling into the 20-day line, I think it's viable. So I actually own some of that. The hot ticket this week has been Tube Mogul. I mean, how can you not be hot with a name like that? Tube Mogul. I think, what is this anyways?
Tubular.
What is this? I don't even know what these guys do. It just shows you how important stories are. But over the weekend, it showed up on my VDU or my Voodoo screen, volume dry-up screen. And I remember I was talking to a friend of mine who's actually a broker, a big broker over at UBS, and as I was going through my screens, and he was telling me all about this new Maserati, blah, blah, blah. And I came across, like, oh, look at this one. Should be buying this one. It's an IPO, was in a flag formation, and it's took off. So I own some of this. I think this might be a hot little story. You got a Bible gap up here, but it doesn't hold. There's a pocket pivot. But this thing trades, 251,000 shares a day, and I'm loath to put out a pocket pivot report on something like this because all it takes is 100 or 200 of you to decide you're going to buy 2,000 shares, and you're pumping the volume up 75, 100%. So I kept it to myself. Sorry, but I didn't know it was going to take off like that. But that's a nice move of what is that, Dr. Like 20-something%. So
Yeah. 25%.
Yeah, so I think this thing might have more
pivots
potential.
out of these formations, these IPO formations tend to have a fairly high success rate. Even though it is a small cap, the formation is good. However, in this environment, I think the average person should not take this kind of risk because the small caps have not done well. So yeah, to put out a report on that day, I don't think. The trade could have so easily not worked out.
Yeah, and then I don't want to be putting out a report, and it doesn't take much to drive it higher. I mean, for all I know, my buddy over at UBS was buying it for his clients, and so they were the ones pushing up. Who knows? Anyways, somebody says, should average daily volume be at 544,300? Well, I think if you're using a 50-day moving average of volume, it doesn't start till here, so that's what I'm using here. Maybe somebody else
about
has
560,000.
Yeah, what do you show on your system there? I show, well, there's 544. Yeah, O'Neill's calculating 544. I'm not sure where they're getting that from. Maybe they're getting it from some of the volume earlier in the pattern. I think
that's strange. I get on O'Neill's 560,900.
I get 544. Well, shows you how reliable all that is. But in any case, now you guys are all buying it. I see it starting to pitch to the upside. It's new merchandise, so yeah.
Actually, I know what the problem is. Yesterday, if you don't count today, it's 544, but you count today, then it's 560.
Right. Somebody points out, yeah, nice new merchandise. Yeah, it's new merchandise. I like new merchandise. You get the follow-through day. Was that what, Tuesday, I guess? And it's very V-shaped, and I'm skeptical because I'm not seeing a lot of things set up. And I watch the stocks. I don't really pay attention to the indexes. They do not guide my thinking, and a lot of people are always perplexed by that because they like the IBD method of market in new rally, everybody buy stocks. It's simple. It works for simple minds, and I think the market's a lot more complex these days than that. So I like to focus on the stocks, and I just watch the stocks. You make some nice money shorting here. There were some great shorts, and there actually continue to be, because let's just go through. I'm going to just do my usual thing and just look at the market on the basis of the stocks. Okay, so a lot of things have pulled back and gotten whacked, and so they get to a point where it's pretty extreme, but some of these things continue to break down. Now, Amazon is undercutting. You can see here it's undercutting this low, and that was my downside price target. And for those of you who follow me on Twitter and in the chat room, you know I was talking about this thing might just have to blow through this low on earnings. That's what's going to cause it to do that, and sure enough, that's what happened. But, you know, bulls make money, bears make money, pigs get slaughtered. So what you want to be doing here, I think, is now it's at 290. Okay, so when it undercuts, that's a cover point as far as I'm concerned. I know it's easy to get excited and think, oh, it's a shortable gap down, but it's also undercutting this low here, and so temporarily it might get some support. If the market gets going to the upside, you might see it, you know, rally back. I don't know. I guess Amazon, the ultimate stuff stock, Dr. K. Yeah. Anyways, let's see what else we got going here. Netflix, somebody asked about. Well, you know, this again. See, it's a gap down, but it's not a shortable gap down because you're coming down into this area of congestion, so it's kind of risky. You can try it using the high of this day as a stop, but if you did, you'd be gone. So it's wasn't happening. Now it's kind of wedging higher, coming up to the 10-day. Maybe that's where it runs out of gas. I don't know. But you also have to consider the fact that if the market continues rallying, where's the most optimal use of your capital, long or short? And so if you don't think about that, then I think you're prone to getting kicked around a little bit. So let's see. I'm testing out a little Tesla here on this little pullback in here. It's just kind of hanging out. I was shorting it, and I noticed I've been trying to short it in here. You know, it's coming. If you draw a neckline across here, it's kind of coming into the neckline. And so what I noticed is it pulls back yesterday around 231. It gets a bid, and it's holding. And there's not a lot of selling volume, and it's holding around the 10-day. Sometimes these things will run up a little further, and I think you're not really going to get any resolution to this until earnings come out, and maybe it does what Amazon does. It breaks down, but you can see we're in it's a fractal head and shoulders, and you might be forming another right shoulder. But I'm just kind of testing this now. They're hitting it, of course, because I bought a little bit of it here, so that means it's probably headed lower. But you know, maybe this rallies to the upside, and they haven't come after everything on the long side in terms of stocks that have been beaten down and might have a potential to rally a little bit before earnings. But we'll see. Anyways, just testing that. I don't get the sense that it's all that weak, which means it'll probably blow apart today, but we'll see. Anyways, is CLAC setting up as a pocket pivot, somebody asks. Just answer that question real quick. No, how could that be setting up as a pocket pivot? It's V-shaped, straight up from the bottom. So I would suggest rereading the chapter on pocket pivots in our book. That's like so far away from being a pocket pivot. You know, it sort of points out the thing that I talk about. A little knowledge can be a dangerous thing. If you're not paying attention to details and you're not making sure that you understand something comprehensively and all the nuances about what constitutes a proper pocket pivot, then a little knowledge is a dangerous thing. And what you need to establish is complete knowledge and be a little more thorough in your analysis. You know, I mean, only a moron would buy a V-shaped move like that. That's not a pocket pivot. So just so you know, a V-shaped pocket pivot, especially in an extended position like that, is very dangerous. Dr. K, you have anything to add to that?
Oh, I mean, you have to really develop your chart eye so that you can see the price volume action leading up to the pocket pivot is, in this case, very defective. I mean, you've got a big high volume gap down day just a couple weeks before, so that kind of invalidates any pocket pivot from setting up for a while, because you know that's a big error in the pattern. And you know, when you see a gap down on huge volume, generally speaking, you don't want the other shoe could drop, as they say. So if you buy into the stock within weeks of that gap down, you can be asking for trouble. I mean, there are exceptions to that rule, but generally speaking,
yeah,
there are better stocks out there that don't have that kind of defect.
Anyway, somebody asked, does the H&S pattern, head and shoulders pattern, apply to indexes? No, I don't pay attention to it, and I'll show you why. Let's just go back. Turn on the Wayback Machine, and we'll go. Here's that. Look, a head and shoulders. Oh my God! But the stock goes, or the index goes higher. Oh, let's go back to another one here. You know, here's head and shoulders. Oh my God! Stock index goes higher. Okay. Let's see. Do I need to beat this one to death here? Let's do another one. I'm going back, way back in the way back machine. Here's another good one I remember. Yeah, right here. Here it is. Shoulder, head, right shoulders. Oh my God! Index goes higher. So that that shows you what head and shoulders in the indexes get to, which is basically nothing. So I wouldn't pay any attention to them. I got to say this again and again and again. Forget the indexes and forget getting all anal retentive about what the indexes are doing. Forget about follow-through days. Just watch the goddamn stocks. Pardon my French. But, it amazes me how people get so hung up on such minutia that's so pointless, and what the indexes are doing. And what does that mean? If the indexes are giving some head and shoulders, so you short the whole world here. If they keep pushing you, then you might be in trouble. But I've found over the last few days, I'll come in and test the short side, and boom, they run me out. Yesterday, I actually got a little bit of love on the short side briefly, and there are some stocks actually. If you were in the chat room, 3 days?
I was just going to say that the follow-through day phenomenon. I mean, it has not been working very well. As anyone can see, on like IBD, going to market in uptrend, and not being able, either being late or being wrong. It's just because it's a QE environment, so the follow-through day effect is less meaningful in this environment. I mean, if we go back to pre-QE days, yeah, the follow-through day was a very good indicator. It had its weight, but right now it doesn't. You have to use more critical analysis to get a sense of where the market might be headed, and
Right.
Of course, that will take the form of leading stocks and their price volume action,
Right.
and how the pattern overall is shaping up in leading stocks.
Market's gathering some momentum. So my theory here is that what you'll see is as we run up here, okay, remember we always talk about this concept, trade the trader. What is everybody thinking right now? And we were thinking that perhaps and guilty of that, and so you have to kind of think against yourself, which is I find very useful at times actually. But in this position, you're running up into the 50 days. So what is the crowd thinking? Well, you got to retest, and it'll retest the 200-day. It'll retest some level, the whatever, and then if that holds up well, then we're okay. But what if it doesn't? What if it just holds up tight here or just keeps going? And I think it could. I don't think the last thing you want to use for your terminology in this market is the word should. The market should do this. The market should do that. The market seems to do whatever the hell it wants and doesn't really care what I or anybody else thinks it should be doing. So we don't really want to get bogged down in that sort of thing. So I kind of look at it as what does everybody know right now? What's the major expectation among the crowd? And that is that we're going to have to retest, and maybe you don't. So everybody sits back waiting for the retest. What I want to see is as we get up here, how does the market act on pullback? So what you see happening this morning is the index is pulled down. It started to look a little scary. I think we got down -20 or something on the Dow, I think. Hopefully I wasn't imagining that. You can perhaps confirm that for me, Dr. K. But they make it look a little scary, and then it comes back up. And I think some of that's to suck in some shorts here, and maybe you're just going to ramrod this thing straight up to new highs. I'm not going to say it can't happen. All I know is I have made some money on the short side, so I was short Yelp into earnings. And I got to tell you, there's no way you can win on this one unless you're going to have the cojones to put out a big position and get really short this thing, and then get the full orgasmic joy from being short this jack to the downside, or this breakdown, this gap down. If I go in and I short a 10 or 20% position, yeah, if it goes against me, I have a tolerable loss. But if it makes me money, I'm ticked off because I didn't short more. But anyways, this one worked. I've covered it, and it's down into these lows in here now. Let's pull this weekly chart up. So, undercutting in here, getting into these lows, right about this low over here, undercutting this low. So it might try and rally with the market. I don't know. We'll see what happens. But, that's one. Amazon was the other one. But I think you cover that. You cover this move today on the undercut of this low, which is what my downside price target was. You got Biogen looks pretty pukey here. But it's rallying, and it doesn't really want to give it up. And I don't know if you can trust this stock long or short, because every time it looks like it's going to blow apart, it jacks to the upside. See this? And it looks like it's going to jack to the upside and take off. Here's a, if you look at this, sort of a late stage cup with handle breakout here, which corresponds to about right here. It fails, and then you come down, you look like you're going to blow up, you undercut this low, and you jack back to the upside, so it's all over the place. Now you blew up on earnings, but not, they glued it all back together and pushed it back up above the 200-day moving average, so, that's just what goes on in this market. And so it's tough to short here, it seems like to me. That's my visceral experience, so I'm going to use that knowledge to my advantage. Somebody says, what does you mean by a fractal H&S? Well, it's a smaller head and shoulders that's not visible on the weekly chart and which is in the formation. So in other words, let's look at Amazon. If we look at Amazon, here's a big head and shoulders. But around the peak, let's go here. So here's where the head and shoulders was. And then as it comes around, it forms this other head and shoulders, okay? But notice how the right shoulders of this head and shoulder, so if this is a left shoulder, a head, and a right shoulder, notice how this right shoulder is also a little miniature or fractal head and shoulders. See that? And then you can draw a higher neckline, so you can see it trying to rally into neckline here, and it fails, and tries to rally into that neckline again. Meanwhile, the neckline of this head and shoulders is way down here, and so that's what a fractal head and shoulders is. I stole that term from Dr. K. I used to call it, shoulder, head and shoulder within a head and shoulders, but I like fractal better. So thank you for that, Dr. K. You are useful after all. Gilead
It's nice to be noticed.
Isn't it though? Gilead's trying to
see you at some point. I promise. I will.
Gilead's trying to break out. So I don't know. Straight down and straight up. Could you see this as a shakeout and a breakout? Sure, why not? But if the market goes, maybe this goes too. Did they announce earnings yet? I don't think so.
Not yet.
Let's see. What else we got? YY. Not really any position. I would want to be buying it. So there's no buy points in there. So. A couple of names I thought looked interesting. This TrueCar, it's like pulling back in here, starting to dry up. I don't know. Follow up to networks. This one's crazy too. This is another one. A flag breakout. It fails. So this thing looks like it's a bust, right? It looks like it's going through the 100 level, and of course it. I bought some in here off the lows last week when I was telling you guys about the fact that I was coming in on the long side looking to play a bounce, which I did. And as is always the case, everything bounces further than I thought. And this one bounced, I thought it might become shortable again if it reversed back through the 100 level. It almost did last Friday, but not quite. And now it's continuing to new highs. So welcome to the QE market. So I can laugh about all this because I'm up nicely for the year. And all I need is one good push, one way or the other. I'll take it long, I'll take it short, going into the year to get above triple digits. So the ever elusive triple digits, but I don't know. I'm pretty obsessed with it, I suppose, but I probably shouldn't get too carried away with it. To be up, I think, more than, say, 30 or 40% for the year, and if you are, I think is very, very good in this year because this is a rough year. It's been a tough year, a rough year. The market's up how much, Dr. K, for the year?
Just a little bit now because it pulled back, but probably, we've had a good bounce. So let's see, the Nasdaq 417644, 4176. We were up 7% on the Nasdaq because we made a pretty big move the last few days.
Okay, so.
But yeah, the most of these guys are having a heck of a time. Breaking even in this kind of environment where it's just nothing but fake outs and manipulations and
right.
2013. It all started with the full bore QE in Jan of 2013. That was a really treacherous year for people and a brutal year for trying to beat the averages. I don't think too many people did.
No, yeah, and this is one of those years. So I don't know. I think being able to be short in March, that was a real big. Real nice short selling opportunity. Most recently, the short off the peak when I got my fillet of fish craving, which pretty much called the peak. We're going to have to create the FOF model, fillet of fish model, Dr. K. Okay, DGLY, somebody asks. Bottom fishing pocket pivot. Oh my God, look at this thing. I guess if you want to try and call, I would say maybe this. here off the 10-day. You're trying to come up off 58. Yeah, I don't know. Is this one of these? This is a hot name. Why did this thing have such a huge?
It's not a rocket stock, by any means. And the other problem is that when you get these sharp moves, they rarely repeat after this kind of correction. So I would not be taking this kind of pocket pivot. I mean, it's going to be very volatile. You could get maybe a few points off it, but it's again, there's going to be a lot of noise in the pattern, I think, from here. Again, the market lives the fool. It's not going to just give you all of a sudden this stock going up, into the mid-20s from this current level.
Right.
It's highly unlikely. I mean, it's just history should. If you look at a lot of the stocks that have done this, they rarely will do it again. Maybe you have to wait a year for this to happen again, or at least 6 months.
You have to buy here because it's going to do this all over again. Just like Plug Power did. Had this big move, and of course you should be all over it. It's almost giving up all its gains. Oh, I remember the guy.
You really see a constructive basing formation. I mean, in this stock for it to ever be actionable. Right now, it's not constructive at all. I mean, if it comes out back around and gets real tight in there, and then maybe it's actionable then. But still, you got to be careful with these because they're thin.
Twitter is that's now. See this one. They come out with earnings on Monday. I'm not going to mess with this. I've been shorting it into these rallies, but I took my profit here. I don't want to goof around with this thing into earnings. What I noticed is you got this big cup. You can call it a cup with a handle. You could call it a pod. And so what I noticed here is you're getting these big weeks of selling in here around the 50-day. So who knows what it's going to do into earnings, after earnings. But what I also notice, you see a little head and shoulders type move. Here's a flag breakout. It tries to come out and fails, and holding along the 50-day moving average and not really getting anywhere. So, I don't really like it. I wouldn't hold it in earnings. I think it's suspect and subject to potential blow up on earnings. So
it's gapped down twice on earnings and only gapped up once. So it's a bit of earnings roulette there.
Yeah. I'm going to say, let's see, I'm going to be a gambler here and say that it's going to blow apart. Anyways, let's see. Infineon. Well, that's a gap up, so if you think it's a hot stock you need to play, I guess you could buy it on using the usual rules for a Bible gap up. But it's kind of out there. Splunk. Who knows? Splunk is trying to come up. I actually played this move, and I've shorted it in here and covered and undercut these lows. It turns around and goes back up, and it looks ugly and turns around. Now it's coming up the 200-day. So I don't know what to tell you on that. The one thing to keep in mind is it reminds me a little bit of Yelp before Yelp broke apart. Forming a head and shoulders. So it's kind of neither here nor there as far as I'm concerned. Grub. Grub had some pocket pivots in here, but yesterday they came out with earnings and it reversed, so I don't really care for this. I'm not sure as hell not going to buy it. Ambarella. I don't really have anything to say there either. Do you have anything on Ambarella, Dutch K? Does that excite you? I don't. Yeah, I'm not really gonna. Not something I'm gonna buy into. Okay.
Again, that's a pretty big defect in the pattern when it comes up straight off like that on big volume.
How about this one? SNCC.
SNCS. What is it?
SNCR. SNCR.
The pattern doesn't jump off the page at me. It's a little bit wide and loose in there.
Yeah, so
the fundamentals look okay, but no, it could set up. It's doing a lot of things right, so it could set up and it could be actionable. But right now, I'm not particularly interested in it.
Right. LinkedIn there's kind of a little fractal head and shoulders in here. You might see it, but LinkedIn's a possible pod. You see the big pod-like formation there, and right now it's finding resistance along the 20-day, and I guess you could draw a neckline or something underneath these lows, get some resistance, and backs up, but it's there's nothing really decisive here, and I think you're going into earnings. What is it, at the end of the month or at the beginning of November? I forget. Let's see. Coors look like trying to break to the upside. Yeah, but I don't know. I'm not going to mess with this. That doesn't look like it's trying to do anything on the upside. It looks to me like just in a steady downtrend, so I'm not going to touch that. Come on, you can do better than that. ANET, I don't know. This one doesn't seem to want to go anywhere, so I'm not going to touch that. Thoughts on FB with earnings next week? Why do I need to think about it? Stock says shakeout and a breakout. Am I going to buy it here going into earnings? Probably not. Can Dr. K explain his new MDM? Yeah, can you do that for a second, Dr. K? I gotta check in real quick. I'll be right back.
Sure. Well, it's the same MDM. The only difference is that, as you know, I've been using created this crossbow intraday model. It's not practicable for subscribers or even for myself. I mean, you've got to be on top of the trigger, and it triggers typically, one to four times a day. And so, if you're on a phone call or you're in the middle of something and you miss the signal by, a few minutes, the signal's probably invalid. But that's for that particular model, which is tracking volatility, and volatility is, well, it's volatile. So what I found was if I overlay that in certain instances with the MDM is not buying volatility, it's buying in ETFs that are related to market indices, like triple Qs, for instance, which mirror the Nasdaq 100. I found that it can optimize my entry points into the market during periods of elevated volatility, kind of like the one we're in right now. And therefore, the model, in the past, it tended to switch signals more frequently during volatile periods. But with this, it just kind of fine-tunes that procedure. And of course, when volatility is not elevated, the idea therefore is to sit and ride the trend, and so the model could sit on a signal for weeks, provided we're sitting in an uptrend.
Okay, I'm back. Anyways, now somebody mentioned cyber. I was going to mention that. Whoops, wrong. CYBR, this is another new merchandise situation. That an Israeli security company. I own this actually, and you have a VDU on the pullback just underneath the 10-day line. So you have a 10-day line, you get a pocket pivot. It's trying to move above right now, and I own this turkey, so hopefully it takes off and goes to 100. But they're losing money, but that doesn't seem to bother anybody. IPO came out. What was that price at on that one, Dr. K? Do you know?
It was $16.
Yeah, so basically, doubles on the IPO. Sets up in a flag. It's a decent flag. Notice if you can see this here, the closes are pretty tight right along here. So I'm okay. I bought some actually this morning. So it's my next tube. God, I love that name, tube. Anyways. Tesla isn't really doing anything here. I may have to put my whole account into it now. Let's see. But if you look at this actually looks pretty good. So that's looking okay. AKRX, that had a big gap up move. So it's extended, so you can't buy it. Okay, let's see. CUDA, I like that one too.
Barracuda.
Yeah, but this stock's deep in its base. I'm not a buyer. F5. Been looking at this one as a short actually, because it tried to break out and it's failed. Now it's been rallying up towards the 50-day moving average. I'm not a buyer here either. Let's see, any other questions there? Let me get back to looking at what I'm looking at. Here's another one. TriNet is another IPO. Came out, it's had a run up, forming a base. You had a pocket pivot, but it trades. Is this volume 141,000? What are you showing over there, Dr. K?
Average volume. Well, today 141,300. Average volume 563,000.
Okay, this is showing a little lower. I don't know why. I wonder if there's something wrong with this calc.
Your Wanda probably. You know how it has that 1 day delay.
No. You can see on the chart here. You see this number 141,391. That's based on this. That's got to be wrong, though. Let me see something here.
Oh, no, that's what I'm getting. I'm getting 141. Yeah,
Is that the average?
That's what I'm. That's right for today's volume. The average
Oh, so
volume
that's
is
today's. I'm sorry. Okay, you're right. You're right. The average volume on this is actually
563.
higher. Yeah, yeah. You're right. Okay, I stand corrected, or I sit corrected. Hey, Cyber's going. What are you guys all doing? Buying it for me? Thank you. I appreciate that. MDVN. Somebody else. Medivation. It's in a V-shaped position. It's not a buyable position, so. Palo Alto Networks is going to buy CYBR. That's my prediction. Everybody jump on it now. Thank you. Let's see. I want to be like, if Mark Cuban can get on Twitter and pump his stocks and talk about the Netflix as being a buyout situation, fine. But as I pointed out last week, this whole idea of stocks being buyouts and rallying them on that basis is at best a hollow concept because P has been talked about as a buyout candidate for a while, but it's basically P is for pounded. You see the gap down break on earnings, and it's dying. Market's picking up some steam here. I still think they got to pick up the Tesla and send it higher. So, but didn't I tell you last week I was buying it off of the 200-day line, and that it probably was headed to the 235 range up in here, and sure enough, that's where it goes. Sometimes I almost feel smart, Dr. K, but as I like to say, I'd rather be lucky than good. So, got on late. Have you discussed BABA? Well, yeah, but BABA had this pocket pivot, so it's going bonkers. Earnings come out next week, but looks okay. Let's see. You had to buy it, I guess, in here, or you could have been really smart like me and buy it at 84 and then sell it at 91. So, that was a brilliant maneuver, but whatever. I can do that. If I can do that all day, every day, well, I have been doing that mostly this year, and that's why I'm up as much as I am. So, neener. Let's see. Any other outstanding and brilliant questions? G-Pro. Let's look at G-Pro. Somebody downgraded it today with a $45 target. Watch the 620 here. I actually traded some off the lows on the 620 stretch here. And it went up $1, so I took it. I want to watch it as it hangs out in here. But there's something like 8 million shares short on a 15 million share float. This is one of those nutty stocks that trades, half the float or more every day. And so you're creating a whole new class of owners every day, it seems like. That's what can drive this, especially when you have that many shorts and everybody hates the stock. Market's getting momentum, see? They make it look like it's going to come in. It gets a little bit scary earlier. That's pretty much the typical scenario. The only thing that's really different this time around, I notice, is when the market bottomed, in past QE market bottoms, you don't get the follow-through first. You see a bunch of leading stocks start to show buy points. And a lot of them will be bottom fishing pocket pivots, roundabout pocket pivots. And I'll see a lot of those, so I'll take some positions. This time, the only thing to do is to buy the dip, I guess, because we didn't see that much in terms of buy setups. There are a few things, but not a lot, and not as many as I've seen before on turns that make me confident that the market is turning before you actually see a follow-through. So that's what I thought was odd, and that's one of the reasons I think we were both skeptical. But I'm not a rigid bull or bear at any given point in time, and I'm not. And one of the exercises, look at this Cyber going over 30 now. Are you guys all buying this thing? Look at this. See, this is the type of stuff I look for. I want to buy something. Come on, Cyber Arc. That's another cool name. I mean, how can you lose with a name like that? Just like Tube Mogul. All right, how about it? It doesn't want to come up. What's the matter? Something goofy on me now? Hello. Maybe it doesn't. It's anti-Semitic, and the e-signal doesn't like Israeli stocks. Okay. All of a sudden, my system has decided it doesn't want to show. There we go. So let's go back to Cyber. There we go. I don't know what that was all about. Coming up through the 10-day, watch for a pocket pivot. I think volume has to be greater than 1,860,000. Let's set an alert on that, Dr. K. How about it?
Yep.
Okay, and it's cooking along there. That looks good. Here comes Tesla finally coming up. Let's see. What was I going to say about Tesla? Oh, yeah, there was some news that Daimler-Benz dumped their position in the stock. I guess they had what was originally an 11% position. It was diluted down to 4. Yeah, that would piss me off too. So they dumped it. Rumor is that they sold it to BMW. So, BMW's talked about partnering with them. Maybe BMW buys them. I don't know. But that was one of the things I thought was interesting. On that news yesterday, it held up and closed up on the day. Of course, the market was, in a even turkeys can fly sort of rally. But that's why I'm thinking maybe this thing will try and push a little higher. It'll fool all the shorts. Everybody wants to get short, but the market's really not in a condition to be trying to short the market at all. Anyways, when using the 620, do you wait for the 6 to actually cross the 20 to make a trade? No. Sometimes I go on the MACD stretch, like I just pointed out. Let's go to G Pro. Here, you get the MACD stretch down here. Let's make this a little bigger. You see the MACD is stretching here down close to the 74 level. You get that, and then you see this cross on the MACD line. And sometimes I'll come in there, and I'll do the reverse on the short side. And a lot of it also is I'm just using this sort of as a guide. Now you can see it's kind of giving it up, so probably not one to play with. I use it as a guide to steer my intraday trading. And a lot of it also is, I'm feeling my way through the situation, watching the tape, and so on. Because I am a tape watcher. These days more like a blinking lights watcher, but there's no tape. But I combine it all together. And again, I wouldn't get all hung up on waiting for this cross here means it's a buy signal. See how far that would have gotten you here? This is more of a dynamic situation because it's getting hit on a downgrade, which can work its way around through the stock for a little while. I'd watch this pullback here intraday, though. Another thing I'll look at, because I don't use this chart blindly. Oh, it's crossed, so I'm going to buy. And I think if you do that, you're an idiot. And people always want the holy grail of trading where they don't have to do any real thinking or use their judgment or develop any skill. They just have something flash at them buy and something else flash at them sell, whatever, and operate on that basis so they can be mechanical, unthinking, moronic automatons. Not my way of handling things, but this chart, comes in handy there. So they're smacking it down again. So it's a little, to me, this one's a little iffy, but maybe it needs to test 50-day. I think earnings come out on Tuesday. Is that right, Dr. K? Did I get that right? Yeah.
Earnings, well, the Wanda thing isn't always all that accurate on earnings.
No, go to briefing.com. That'll show it to you. Anyway, so FinViz says BABA earnings 11.17. Is it? Okay. Wait a minute. Yeah, O'Neill says 10.28. So they're always on top of things. Let's look at, whoops, let's look at, let me check something else here. Briefing.com, I think, is your best source for earnings dates, briefing.com. Cyber, look at this thing. I'm telling you, it's going to 100. Let's see. Which one are we looking at? BABA. Still love it. It says November 4th is what briefing.com says. I would believe briefing.com. So, but that's just me. So, but it's forming a big IPO U-turn. So there we go. Somebody says just trying to learn. That's good. I appreciate that. Just make sure that you do actually learn, and you don't think things are like this or pocket pivots. So. Let's see. Cyber earnings are 10.28. Yeah, Cyber's earnings are 10.28. See, but they're going to blow it out. So I'm hoping it gets to 100 before then, and then I'll sell. But I don't really see what the problem is buying, a few thousand shares and hanging out. So keep an eye on Tesla. I'm still watching this thing. Own a little bit of it. Let's take a look at this. You can see, though, it's looking grim on the 620. So you could actually shorted it, and you get some quick Skrilla, I guess, on that one. But we'll see how this thing acts if the market continues rallying. My thinking is you'll see it push, and there are a lot of people shorted. So we'll see. I don't know. I'm just trying that one out as a trade. The Cyber really is the hot ticket here. You can see it. We're now getting up to a whopping 428,000 shares. So I'd say it's on track for a pocket pivot. But this thing is popular all of a sudden. Was it something I said? Jeez. Look at that. It's moving fast now, up almost 5% a day. Who'd have guessed? But, you know, these are the things I look for. And the tube is the sort of thing I look for, you know. And I don't like to chase stuff, and I don't need breakouts. You can take your breakouts and you know what you can do with them. You know, IBD babbles on about this, and yeah, okay, well, it's broken out, but I definitely don't trust that straight off the bottom. What do you think of this one, Dr. K?
Well, I mean, it's too extended, but it looks good where it's at.
It looks okay, but you want to buy pulling in. But I still don't trust a breakout. You know, I don't know. And it's an old merchandise name. I want new merchandise. Hot, new merchandise. If it doesn't meet that criterion, it's always suspect. And I think in any new rally phase, assuming that's what we're going to go into, well, you'd have to say de facto you are in a rally. So you can't say, well, you know, if we're in a rally, we are in a rally. And I think on that basis, you have to look for, I think, new merchandise situations. But they tend to have the most potential, in my view. Somebody says, was your attention drawn to Tube and Cyber via HGSI software? Actually, just looking at IPO screens on either that or my other systems that I use, like Wanda. And I check IPO, you know, I run screens on recent IPOs over the last year, last 2 years, last 3 years, and I group them. You do that, right, Dr. K?
Yeah, sure. I mean, there's all various ways to do it, but the important thing is to figure out a way that is efficient and, you know, covers your ground.
Yeah. Anyways, so that's how I find it. Cyber coming through on Twitter after you mention it. The moles are repeating you. Oh, I love them so. Yeah, I know. People do. Well, I've got a fair amount. I've almost got a couple thousand followers now on Twitter, Dr. K. So, I love it how some of the people who aren't subscribers. Basically, I intend the commentary for subscribers because there's a certain context to what I'm talking about. And there are people who are just, you know, following me and they want to know what a 620 is. Like, hey, subscribe and you'll find out. Let's see. You know, or somebody asking me, what do you think of Amazon? You know, like I'm supposed to provide them with personal investment advice on Twitter. Not the sort of thing I want to get into. Let's see. Any more questions? Isn't it fun to watch this stuff happen in real time? I mean, this guy was sitting there around 29. Let's take a look at this on the 620. Yeah, it was sitting there before we started. It's 8:50 now. We've been going for almost an hour, and this thing was sitting there around 29.20, flatlining. Now all of a sudden it's taken off. Craziness. Okay. Oh, Apple. Well. For now, Apple's proven me wrong, so that's okay, because whenever it comes up to the top of this range, I short it, and this time it kept going through it. I still think that with such huge news, allegedly huge news, on the earnings, you know, everything was perfect, and you could turn on any financial TV channel, cable TV channel, and there's a panel of people all telling you, do you like Apple? Everybody agrees their hand, I love Apple. So everybody loves Apple. And you got to ask yourself, who's left to buy it? And there's some confirmation of that because it's very slow coming out of the space. I mean, on such huge sales and news like that. Can you hear me okay, Dr. K? Dr. K, can you hear me?
No, you blanked out there for a moment.
My system froze up. I don't know what that's all about, but I did notice a Time Warner truck down the street. And when they show up, I always got to be careful because they start messing around with the internet, even though I have a special line that supposedly never gets shut down, but whatever. Anyways, so I was surprised on such excellent news. You know, the stock gaps up. Is that a viable gap up, Dr. K? 4 days ago on Tuesday?
Let's see. Yeah, we had a, I mean, the earnings came out and everything, and I think we mentioned it, but
it wasn't a viable gap up.
It's not. Yeah, the problem is, I mean, on November 14th, we mentioned that. What was it? November? No. Sorry. No, but the problem with Apple stock, it's not a viable gap up because really it's kind of more of a fundamental reason. It's at 628 billion, and yeah, it could go from here because the pattern's pretty good, but it's probably going to not have the speed it used to. At some point these stocks do reach a maturity level, and then they start to slow. When they start to slow, they start to routinely violate their 50 days, get sloppy in the pattern, and become pretty hard to trade.
Right.
So I think that's the biggest risk to trading Apple at this juncture. Because I mean,
Right.
if it's you want to get a nice gain in these things. I mean, if this thing goes up 50%, it's going to be $1 trillion stock, and that just seems unlikely given the amount of competition out there.
Yeah. So yeah, that's the way I look at it, and it's a kind of a slow mover. It's like, why do I need Apple when I can buy this? It's like, or even cyber. Cyber's already up 4 or 5% on the day, and Apple's taken forever just to get another 3% higher after earnings. So, I know what I like. Gil, you can lock your Twitter account if you want it to be just for subscribers. Well, what I'd like it is people to see what we do and what we talk about, and then subscribe. So it's kind of a marketing thing, to be quite honest. And what I do, though, is I keep the commentary cryptic enough such that only members who understand the context. So if I'm using it, if I say something like "watch the 620 on XYZ," then members know what that is. And then, of course, you get the 10 guys and gals twittering me or tweeting me saying, what's a 620? It's like, well, sign up and you can find out. And then if they don't, well, too bad. My view is, right now in terms of personal career objectives, is that I find that what I do pretty well. I mean, based on the number of feedback we get from people who have improved their trading as a result of learning how to use some of our methods. And Dr. K, you can confirm this. I think I do pretty well as a teacher, trying to teach people how to trade for themselves rather than trying to manage their money. And I enjoy writing about the markets. When I was younger, I fancied myself, probably you did too, Dr. K, I think, because you've written some stuff as well. I fancied myself an author of novels like Steinbeck. Financial books, I'm close enough, I suppose, but I sort of achieved that dream in a sense, and so take what you can get. And
You went out again.
Yeah, I'm freezing up.
Hello?
I'm here. Don't worry, I'm here.
You were out there for a number of seconds.
Can you hear me now?
Yeah, now you're fine.
Okay, now it's telling me my e-signal has gone.
Now you're on again.
Now I'm back on. Audio connection restored. It's Time Warner. I'm going to go run down the street, have my wife run down the street and tell them to chill out there. But in any case, where was I? Yeah, so I enjoyed writing about the markets, and so, for that we have websites, and I like promoting those, and I'm going to. So let's see. Can you hear now off and on? Yeah, we know what's going on, you guys, so just kind of bear with it. Let's see. Any other hot questions? So that's what the Twitter thing is all about. Anyways, TriNet is moving. Let's see. See, Apple looks cheesy here. It's just slow. Cyber's still going. CyberArk. What a great name, CyberArk. I don't know which one I love more. God, it makes me just want to buy more of these stocks. They're just so cool. Anyways. This G-Pro making new lows. Not happening. This one, Vasco Data Security. I've watched this one. It's been moving along with Palo Alto Networks. It's in a similar business. Very thin stock, 638,000 shares on a $18 stock. So that's pretty thin, but it acts okay. But it's a thin stock. Somebody says, "Do you still offer account management?" Well, I just said I gave up running other people's money, so that would probably be a no on that. It's a pain in the ass, and it really screws up my thinking. And you get people whining, and I'm going to say that for the most part, 90% of the people you run money for are very nice and supportive, but you always get the jackass or two who's just going to harass you all the time. And then if you lose money, they act like you put it in your pocket, you took their money and put it in your pocket, and they're going to sue you and all this other crap, or go out and badmouth you to get even. As if that helps you make your money back. It's probably the dumbest thing I've ever seen. But But yeah, no. So someone says amen. Yeah, Scott, you know, you know what I'm talking about. Anyways. Da, da, da. Fuel is a great name, but stock has gotten crushed. It's not that cool. I think Tube is where it's at, man. Tube and CyberArk. Oh, how can you pass those up? Well, let's see. Any other hot to trot names out there that I like? It is hard to find things to buy. You know, there are some shorts out there. Look at CMG is in a little bear flag. Maybe it's heading for the 200-day moving average. I'm not really sure yet. Let's see. But that's pretty ugly. But then, you know, it shows you're in a bifurcated market. Some stocks are hot and some aren't. Well, let's say some are hot to the downside, so they're almost flaming. You know, they're just going up in flames. Tesla's still coming down. That's not turning for me. I may have to abandon that idea, but that's okay. I have cyber. What else? Oh, Silica was a short I gave to everybody on the chat room 3 days ago, right at the 20-day. You can see this. This has been whacked, and so you're getting a little left shoulder here, a head. You know, so the big breakdown on the right side is the right side of the head, and then you try to come back above the 40-week line on the 200-day line. But notice on the weekly chart, you're sort of stalling on heavy volume. They come out with earnings, I guess, next week, and we'll see what happens then. But I thought it was a good, you hit it right off the peak here, and it's down here off the 200-day cover in there. So I covered that one today, and it looks, it looks like it was a good trade. I'm not sure going into earnings what I want to do because it's hard to tell. This thing could go higher. The left shoulder is way up here, so it could rally up to the 50-day. So I don't think I want to stand in the way of that. So CRM trying to break out. It is higher. I actually shorted that one yesterday.
Yeah, you're out again.
How about now? Am I back? Can you hear me? God, this is getting annoying. Am I back? How about now? Am I back? Am I back?
Yeah.
Yeah.
Can you hear me?
Yeah, this is getting,
Yeah, you're in
we're
and
almost
out.
done though, but where was I? CRM, we're going to answer this last question. How about it? Now it's not going to want to bring up the charts, so this is really ticking me off. Let's just kind of see what comes up. There we go. So now we're probably okay. No. Doesn't want to bring up CRM. Let's take a look at it somewhere else. I can talk about it. I don't know. I think this is, to me, might be a short. I don't really know if I want to play this. I wouldn't be buying it. So, anyways, as I sit here with blank charts, real helpful there. Why is it? Let's see. Nope, doesn't want to bring up anything. You can hear me okay, right, Dr. K?
Yeah, now you're fine.
So, anyways, what is your sell signal on that Cyber 620? I don't know. It's not going down. I bought it at 29, and it's going higher, so I don't need to worry about it. If it starts to get back down there, maybe I sell it before it turns into a loss. But, if you use a little common sense, okay? I don't understand why people have to ask me, what is your stop? What are you using for your stop? Figure it out. I mean, are you that lame? If you're above the 10-day line, you're looking for a pocket pivot, well, then what's the best reference point for a stop? The 10-day line. So that could be your reference point. But it depends on, what you're willing to risk in terms of sitting through a pullback. If you want to use 5-6% as a stop, you can do that, But you really have to figure it out for yourself based on your own risk tolerance. And the idea that I have some magic stop that you can use too is a bunch of baloney. So my stops might be a little deeper than yours because I'm up so much and I have deeper pockets. So anyways. Better to learn off you guys. If you don't understand how to trade yourself, then where does that leave you if you guys decide to stop for whatever reason? Well, we don't run anybody's money. So, and the other thing, I would argue that I personally don't think I'm all that good, at least right now, at running other people's money. Maybe someday I will be. But, Bill O'Neill was right when I left in 2005 to go start a fund. And he said to me, well, you might find that what a lot of guys happens to a lot of guys who are able to trade their own accounts very well, when they try to do it for other people, the whole thing falls apart. And he was dead right, you know. And then he told me, when you get hit, the first time you get hit, everybody's going to be screaming and wanting to sue you and blah blah blah. And he was dead right. And so I learned my lesson. And I don't know how that old song goes. Like it's all right now. I learned my lesson well. I can't please everyone, so I just got to please myself. And in the last year and a half, 2 years that I've been running my own money, I'm giving myself a lot of pleasure. So I prefer that. So. Anyways, someone says, actually somebody I met, Dr. Brad, met at the workshop finally, and he was very helpful last year when I had my surgery in terms of cluing me into what was likely to happen, and he was pretty right. But he says, the main thing that I've learned from you in the past year is to think for yourself. If people can just learn this and to trust it, most will do okay, if he says so. Anyways, that's all we've got. And, you know, we'll see what happens here. I see some things, you know, I want to try on alongside. I'm getting some love today out of stuff like cyber. I like the Mobileye, but they come out with earnings on Tuesday, I believe, after the close. We'll see where that goes. The Tesla, we'll see what happens there. I'm thinking it should rally with the market, but maybe it doesn't. They'll probably just be better off with cyber. And the Tube, which I think is just an awesome name, and we'll see how it goes. Anyways, you guys, that's all I've got. So, you know, watch out for pocket pivot alerts, Bible gap up alerts, and again, trade the trader. Think about what the crowd is thinking, and then see if the market confirms what the crowd is thinking. And obviously, the thought today was that, or the expectation was that we would see a pullback, a retest, so to speak, of the lows of last week. Was it last week? Yeah, it was. And then you know, then maybe you'd be okay. Maybe you don't get that at all, right, Dr. K? I mean, obviously you think so, right?
We could see, you know, the averages hit the 50. That could serve as some temporary resistance, and volatility remains elevated. So, you know, we're going to be on the watch for, you know, the possibility that this current signal might switch again in this environment. But right now, things look like the uptrend's intact.
Yeah, and there are some things, new merchandise that I'm finding that are working for me at least, and meanwhile on the short side, not getting that much love, a little bit on a couple of things. But, you know, you can look at the market from either side, just trade the stocks based on what they are doing and not so much on what the market is doing, because the setups are there. And the other thing is, if you get a follow-through day, I'm not so concerned about having to, you know, pile in on the long side. I let things set up. So, for example, I just let this cyber set up, and then I buy it. And that's what I'm looking for. You have a little bit of patience. You look around. Be a little bit shrewd. Don't just jump on whatever, you know, everybody else thinks is hot right now, like maybe G Pro. That seems to be coming apart. Maybe you undercut this low and go through the 50-day, and then you turn around and gap out on earnings. I don't know. Maybe I'm just being wishful thinking. Anyway, somebody says, great discussion. Thanks again. Have a great weekend. And on that note, I'll say you guys too, all of you, and we'll catch you next time. Take care.
Take care, everyone.